Welcome to the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the deferred sales trust, and investing with proven operators who have a track record of success in commercial real estate is the best way for you to grow your wealth. I'm your host, Brett Swartz. In each episode, I am joined by some of the best financial, wealth, and real estate minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. Hey, I'm excited about our next guest. We're actually, it's a kind of a special show in that we're announcing a new strategic alliance. In fact, I've been working with Brian Burke and Praxis Capital now for about a year with co-clients, and now I'm a personal investor. And we're excited to be able to offer, one of the biggest questions people have with the deferred sales trust is how and where are the funds invested once it closes. So we're excited to be able to offer some of what we believe is the best in the business with tons of experience. So please welcome to the show with me, Brian Burke. Hey, Brian, how you doing?
I'm doing great, Brett. Thanks for having me on, and thanks for being an investor with Praxis.
Absolutely. It's my pleasure to have you on, and it's an honor to be able to be a part of an investing with you guys. So would you give our listeners a little bit more about your background and your current focus?
Yeah, I've been investing in real estate for about 31 years now. Started out in single family, just doing single family fix and flip type stuff, then grew into a single family landlord. Accumulated about 120 or 130 rental houses in the San Francisco Bay Area, most of which we've since sold off. But our main focus now is it's two pronged. On one hand, we're in the multifamily business. It's a business I've been in for about 20 years. We own multifamily units all across the country. We own in Arizona, Texas, Georgia, Florida, New York, California, and then we have another offshoot of our business through a subsidiary, which is a private money lender. So we've got basically two different primary business strategies at play now, each with their own operating team.
Amazing. And that's part of what we want to cover on this short episode. And it's going to be kind of a teaser episode for the full episode. And that's the ability to use the deferred sales trust once you close on a highly appreciated primary home, business, investment real estate, highly appreciated public or private stock. Once the funds are there, they can go into real estate, like a business entity that lends money. And so let's touch on that. The Riverbend Fund, Brian, how did it get started? How's it going? And what's the outlook for the future for it?
Well, it got started just basically as an observation between a couple partners of mine that there was a need for a private capital lender in this space in our area. So we started out making loans to real estate investors on a very small scale about 3 years ago. Our core focus was professional real estate investors, mostly doing fix and flip stuff, and having a background in that gave us a leg up on being able to underwrite those assets, and we would know what to do with them if one got foreclosed and we got it back and that sort of thing. So that's really how it got started, but it grew much beyond that. We have such a competent team. We've built an incredible network of loan originators that now work for us. And, now we've got a presence in, I think, 14 states. We have a physical presence in at least 5 states, and we've been making loans all across the country. And, we've been doing commercial real estate and residential. I think our most proud accomplishment is we've now lent $500 million, and we haven't had a single foreclosure.
That is really, truly remarkable, right? And I absolutely love the approach and the model itself. And I don't know if we can share any kind of the details. It's kind of up to you, but essentially, accredited investor, and you can invest with Praxis Capital. And personally, I'm doing it, as well as a couple of deferred sales trust clients are doing it as well. And we look to send more business to Praxis Capital. But what I love about it is it's A, real estate, and then B, the risk. Talk about the risk there for lending, because some people might think, oh, I'm in the lending business, I feel like there's some high risk there. But talk about how you've been able to achieve that $500 million and not have a single foreclosure. What's kind of the nuts and bolts of being able to do that?
Well, there's two interesting components here. One is that we've lent $500 million with only about $40 million in capital. That's one incredible accomplishment. The other incredible accomplishment is doing it without any foreclosures. And there's two different things at play. You know, we're able to make a lot of loans with not as much capital because we don't stay in our loans. We sell those loans. We have institutional partners that after we close on the loan, we sell the loan to our partners. So we no longer carry the default risk on those loans. And when I say we haven't had a single foreclosure, that includes loans that have already sold. You know, none of our loans have gone into foreclosure. And as a result, we have a great reputation in the industry. A lot of loan buyers want to buy from us. They love our paper because they know we write quality loans. And that's really a function of our excellent team and our excellent underwriting and our experience in the business. So, you know, experience has gotten us good loans, and our relationships have been able to give us a lot of volume. And that the concept of selling our loans after originating them virtually eliminates risk for our investors.
Yeah, that's amazing. And really, it's like the concept of having a dream team, right? So you want to be able to have partners, clients, and strategic alliances to be able to execute. And it really starts, it's like building a house, right? If the foundation's not, if the loan originators aren't building a strong foundation, or if it's built on sand, then you're going to start to see the foreclosures. And then those lenders who are buying those, you know, those secured, promissory notes, if they're buying that and those are falling apart and they're getting foreclosures, they're not going to want to buy with you as much. So you have to really build it up solid from the ground up, and the track record speaks for itself. And that's amazing. 0 have foreclosed, including the ones that you've sold off to the lender. So love that. I'm excited. Now let's shift into the second part of this, which is the opportunity to invest in the multifamily opportunistic fund. And let's speak on the one deal that recently closed in Florida. And our co-mutual deferred sales trust client was able to use the funds there to be in that deal as well.
Yeah, and the deal that they're in is actually it's a fund. So we have a $50 million fund that they invested in, and in the capital we've raised in that fund, we can acquire value add multifamily properties in our markets that we're in. And we did just recently acquire one property in Tampa, Florida, that just so happens to be literally just right down the street from a property that we sold earlier this year and generated a 26% return to our investors. Now, I wouldn't forecast that we're going to duplicate that result, but I would sure be happy if we did. And certainly it's possible, but it's certainly not what we forecasted. But we do know that market well. We've owned there for a number of years, and that's going to be a great addition to our portfolio. We're also currently in escrow on the second property for the same fund in Tucson, Arizona, a 2000 vintage asset that we're about to close on next month. So we're really excited to be able to double the size of the portfolio here in such a short amount of time. And then we still have some dry powder left over to acquire a couple more assets before the fund rounds out.
Amazing. And what I love about what the deferred sales enables us to do is to take and highly appreciate, let's say, a house in Palo Alto, or a house in Southern California, or a business, let's even say, something that's completely different than real estate, sell that, move into the deferred sales trust, and then diversify into things like the Riverbend Fund with Praxis Capital, into the multifamily opportunistic fund with Praxis Capital. And now you don't have to take on all the debt, all of the liability, all of the potential rent control stuff. Professionals who, by the way, what I love about Praxis Capital too, they have, I think, over 30 or 50 years combined experience with over 100,000 units, either owning or managing, and that's multifamily units, which is truly remarkable. And that track record is as rock solid as I've seen in the industry. Plus, they're in Northern California, Santa Rosa, which is not too far from Sacramento, where I'm located. They haven't been in California for a long time, which I think is really smart because the values have been so high. So Brian, would you just touch on that a little bit more of that track record, and also just the overall philosophy of what we're seeing right now in the marketplace?
Yeah, you're right. Our team has 100,000 units of experience, and it's not 30 years of combined experience. It's 30 years each. So each of the principals here has been in this business about 30 years. I think the newest one is 25, and the longest is 40, or maybe it's 43 now, I guess. Years in the industry. So we've got, geez, I don't even know what that adds up to. Well over 125 years of combined
old,
experience.
Brian. You're getting really
I know
old.
Tell me about it. It's like we're dinosaurs now. I don't even know what to make of it. But you know, the track record speaks for itself. You know, we've been through multiple market cycles. We've one of the principals for sure has been in almost every market across the country at one time or another. So, we've got a lot of geographical experience that really helps us out a lot. That's really the key thing that we have to offer to our investors is just that level of experience. We're not newbies that are out here trying to figure this out for the first time. We've been doing this for a long time. We have solid relationships. We have good, solid deal flow. We're buying quality assets, and we think that's a value add for our investors. And specifically to your point a moment ago about selling a business or selling a house in Palo Alto or whatever it may be, the key element here is for someone who wants to shift from being an active owner to a passive owner. This is a very interesting opportunity because the only other way you could ever have done this in the past is through a 1031 exchange, and that means you're stuck being an active owner, and that's not what some people are trying to achieve. And so what you've been able to do with your clients is really interesting to me because you're able to help people transition from an active role to a passive role, and letting us do all that work.
Yeah, 100% right. We like to call it helping our clients create a transformational exit plan, and that includes not only tax deferral, but the ability to have diversification, the ability to put it into passive deals where in a traditional 1031 the whole entity must move, which generally means it's very challenging to be put into A, funds for that matter, or B, other assets that other folks are owning because the structures are just very challenging. So what we found is for anyone who's either A, ready to be more passive, or B, wanting to diversify, or C, what I like to say is just get out of the highly priced West Coast market and then diversify into opportunistic, value add, multifamily, and other parts of the United States that are more tenant friendly. I'm sorry, more landlord friendly and less tenant friendly, right? And then enjoy your wealth plan, whatever that looks like. For some people, it's time. For some people, it's being out of debt. Right. For some people, it's moving funds outside of their taxable estate. There's a number of reasons why you might use the deferred sales trust. But you can go to capitalgainstaxsolutions.com to learn more about that. So Brian, shifting from that, any last thoughts on that, or you ready to shift into some more questions?
Let's do it.
Okay. So what are the biggest challenges you think either your company or the marketplace in commercial real estate is facing right now?
Of course, I think the obvious one is the pandemic issues, and really what this centers around mostly is eviction moratoriums is really the biggest problem for owners at this stage of the game. What we are finding though is most people are paying their rent. We've got some properties that are still achieving month over month record high collections. So this really is kind of a dislocated market where you've got, some areas like San Francisco and New York, for example, are really, really suffering. Landlords are having a really tough time, especially with non-payment of rent issues, and then pandemic-induced eviction moratoriums, that are preventing any recourse for them to correct the situation that they find themselves stuck in, versus other markets like, in Arizona and Georgia and, in Texas, some of these other markets where you have less of that taking place. You have more people moving to those markets than they're building apartments, and that demand is really keeping those markets alive. So it's an interesting challenge because it's not the same challenge in every location, and you've got to figure out how to navigate the differences from place to place.
Yeah, very well said. And I think also too, with Oracle and Tesla in the last 90 days have left California to relocate to Texas. And I believe Oracle's going to Austin, Texas too, which seems to be on fire, and in a good way, meaning lots of influx of population, business growth, and just really friendly business environment. So that makes sense. So what do you see as maybe some of the biggest opportunities you see for the future?
Well, we like to invest in markets where people are moving to and avoid markets where people are moving from. So one of the biggest interesting opportunities I see is, population demographic shifts happen very slowly, but that trend tends to continue for a long period of time, unlike an economic shift that can, do a 180-degree turn on a dime. So an interesting example of this is Los Angeles County. I just heard for the first time in my lifetime had a population decline year over year, which I thought was fascinating to hear because once that begins, that trend tends to continue. And if that does continue, there could be a long decline in California. And who is benefiting from that? Well, who is benefiting are like the no income tax states like Texas, Florida, Washington, Tennessee. People are going to those kind of places. They're also going to warm weather states. Arizona is a popular one. Las Vegas, boy, you get the warm weather and you get the no income taxes. So that one's a double whammy. Those markets are on fire. And it's interesting. The rental market in Las Vegas is really in the toilet because, there's the service sector got hit enormously hard there with, tourism being such a huge portion of their economy, but yet their single family home market is absolutely gushing. It's on fire because people are moving out of California and moving to Las Vegas. And like the high end market, the sales over, $2 million are really starting to trend up, because wealthier people are getting out of these high tech states because you can't deduct your state income tax anymore on your federal taxes. So, this is creating demographic shifts. So what the interesting opportunity is figuring out where these demographic shifts are happening and getting in front of them and acquiring property in the markets where you're likely to be a benefactor of those population movements.
So well said, and it makes sense, right? The the demographic shifts happen slowly, but they last a long time for migration, which is so interesting. How many people how many people should be doing real estate that aren't right now? Do you feel like or in other words, how many people should be selling, let's just say in California, and moving into more opportunistic real estate deals that aren't? Do you still feel like there's to me, I feel like there's just a huge amount of wealth that's still kind of trapped in California that haven't moved yet, and we're seeing that shift. But are you noticing that, or what's your thoughts on that?
It's interesting. What you just kind of see happening is people are buying a second home in the states that have no taxes, and then they're spending their 181 days there. So they don't have any state income tax, but they're keeping their California home as their quote unquote summer home where they'll spend 3 or 4 months. So it's not like all of a sudden, all the real estate is turning vacant in California. It's still fully occupied, but you don't have the population. So it's kind of an interesting, the black and white dynamic where it's like, it's not just one easy story to tell. So, should people be selling? I don't know. We started selling out of most of our California stuff a few years ago. If you look at a population chart of Buffalo, New York, you'll find that for 100 years, the population increased. And then over a period of about 25 years, it turned the corner and began to go negative. And once it began to go negative, it stayed there. And the population has literally been in decline for 75 years. Now, could Los Angeles be the next Buffalo where, we've now just turned that corner? Like for the last 10 years, everybody's been talking about, I got to get out of California. I got to get out of California. Could that be the rounding of the curve like Buffalo saw over a 25-year period? And now that it's turned negative in LA County, could it then start to turn negative statewide? And could that then become a 75-year decline for California? I don't know the answer to that, but certainly you could see that it's possible. There has been a precedent for this in the past. So, is this a good time to sell? I don't know. I mean, that's tough to say. California's always been a really good bet on real estate, but you just never know. I mean, I'd keep my eyes open if I were you.
Yeah, very well said. I just did a video on the 2021 predictions for the deferred sales trust, and part of that was a mass exodus should January 6th happen. When it does happen, if it does happen for the Democrats and to take the Senate, you'll see the biggest mass exodus out of California, I think, in the history of California. But I think it's kind of already been happening. I'll just throw fuel on the fire, but that's kind of for another episode. Now let's dive into the actual potential clients who are watching this for the first time, and you kind of hear a little bit about Brian's background and your background, Brian, and the Praxis Capital. But what are the questions potential clients should ask of you or Praxis Capital?
Well, I think they always need to ask questions that they most people don't think about, and that is, you want to know about the sponsor's investment track record, their history, their experience, their time in business, their overall philosophy, and basically what you're trying to figure out is you're trying to figure out their moral character. And it's such a difficult set of complex dynamics at play here that I finally decided the only way to really articulate this was to write a book on it. So I did that earlier this year, released a book on how to passively invest in real estate opportunities. It's called The Hands-Off Investor. And there's 350 pages of questions you have to ask investors and things to look for in their investment offerings. So this is a lot more than we can cover in this podcast. But the short answer is, it's like a marriage, really. And you don't ever wake up in the morning and say, I'm going to go get married today. And then you just go out and you find somebody, you meet them, and you marry them. It doesn't work that way in real life. It takes a while to find the right person. It takes time to get to know that person. There's a courtship that goes on. There's questions that get asked, and you become, comfortable before you make that commitment. And it's interesting to me how in the capital placement space, a lot of times that courtship gets very short-circuited and or in fact skipped completely, and you get a call from someone that's like, oh, I saw you on a podcast, what offerings do you have available? Oh, well, we have this. Oh, well, can I invest $1 million in it? And it's like, do you even know what we do? And while geez, it's easy to raise money that way, the investors really should be asking more questions than that, and most of them do, but there's always those handful that don't, and they can find themselves in a lot of trouble if they invest with the wrong group.
Yeah, so well said. So much wisdom there. And I know I saw your book, but I haven't read it yet, but now I will. Okay, great. What are some of the key mistakes? Maybe we can dig into that a little bit more, right? If they're not asking the questions of the sponsor, or digging into the track record, or moving too fast, what's maybe like the biggest key mistake a passive investor makes, Brian, and what would be this solution to that?
The biggest investment is investing in investments that aren't suitable for them. And by suitability, there's a lot of different factors at play here, but let's cover just a couple of them. If you have money that you need access to in a relatively short period of time, don't invest it in a long-term 10-year hold, buy and hold play, because you're going to find yourself without access to your capital for that hold period. That could be a problem. If you have long-term capital, something you need to invest for a very long time, avoid short-term deals that then you get your money back too quickly, and now you got to find something else to invest in. So try to match your investment with your investment plan or your investment thesis. Another suitability thing, if you're retired and you need your investment to throw off cash flow, don't invest in a development project where they're going to build something from the ground up that's going to generate zero cash flow until the project is fully built and leased up, because you won't get the cash flow that it is that you need. Then again, if you're a growth investor who, you've got money and you're young and you've got all kinds of time, and what you're really looking to do is grow your portfolio, avoid the kind of, coupon clipper style, low return cash flow plays that the retired people would love to have, because it's not going to grow your asset base the way you're looking to. So try to find investments that match your criteria. And that's, one of the reasons why, Brett, why we have these different things, like we have the multifamily thing and then we have the lending fund, is because what we're trying to do is we're trying to create investment products that can accommodate people that are in different investment situations. And somebody who just needs cash flow, we have a product for that. Somebody who wants growth, we have something for that. So trying to match what you're looking for with what you're investing in is enormously important, or you'll just be disappointed.
Amazing. So much wisdom there, Brian. And thank you for that. You ready for the lightning round?
Oh yeah, let's do it.
Okay. So best real estate investment ever.
Wow. It might turn out to be one that we're just listed for sale. We bought these two properties for about $40 million, a little under $40 million, about 18 months ago. And we just listed them. I think we're going to get somewhere between 65 and 70 million. It's going to be a return above 30%, maybe above 40% IRR to our investors in, in a 2 to 2.5 year period by the time it closes. Amazing result. But it hasn't closed yet, so I can't quite do a victory lap. But we have a feeling we might achieve something like that.
Amazing. 40 million to 65 to 70 in 18 months. That's incredible. I guess would be the opposite of that. Your least or biggest, I guess, failure or mistake in real estate.
Yeah, I call it the colossal fail. In fact, I even wrote an article about it on biggerpockets.com. If you go to their search box and type in colossal fail, you'll find it. And it was a 60-unit property that I bought at the, at kind of what you'd call the precipice of the great financial collapse. It was after real estate had collapsed. I bought this apartment complex for half of what the last guy paid. So I thought surely it was a big winner. But what I didn't anticipate was shortly thereafter, the economy was going to collapse, which it then did in 2008 when Bear Stearns went under and Morgan Stanley went under. All that stuff happened, remember? And boy, I bought this property. It was like, 80% occupied. I started fixing it up. I got it to like 99% occupied. And then that's when all that stuff happened. And then, next thing I knew, it was like 60% occupied. And I used to joke, half the residents or half the units are empty and the other half aren't paying. And that's about how bad it was. And it was a real rough time. It took me 5 years to climb my way out of that hole. I didn't want my investors to take a loss, so I started making the $15,000 a month mortgage payment out of my own pocket and did that for about 3.5 years. Ultimately saved the deal, and I sold it. The investors got all their money back and a little small single-digit return. I got the money back that I put in to keep the deal afloat, and everybody called it a massive success. But boy, I sure call it a challenge.
Oh gosh, yeah, that'll take some years off your life, right? On some of
It
those
sure did.
more challenging ones. Let's see here. So, what are you curious about right now, given 2021 coming up? What and still kind of the changes that are happening, and really, you have technology, you have we talked about demographic shifts, we talked about industry shifts. What's the thing that you're most curious about right now?
Well, depending on what happens on January 5th, there could be some shifts in tax policy as well, which could, certainly impact people that are in capital gains positions. So, there's a number of things. But, one thing I've learned after 30 years in this business is there's always change afoot. All we have to do is try to stay ahead of it and figure out, where the puck is going, and that's where you're going to skate to. And, I look forward to seeing whether or not the markets that we believe are going to be very strong markets in the future turn out to be. Everything that we've researched about them indicates that they will. I'm curious about when all this eviction moratorium garbage is going to end. I'm curious when we're going to stop locking down populations and closing businesses and doing willful economic damage. I'm curious to see when we're going to see an end to all of this. And that's going to have a real impact on real estate values, investment outcomes. So it's going to be an interesting 2021.
Absolutely. Very well said. And for our listeners who want to get connected with you and learn more about you, Brian, what's the best place for them to find you?
Yeah, well, there's a few different ways. You could go to our website, praxcap.com. It's praxcap.com. You can find me on Instagram at Investor Brian Burke. You can find the book on biggerpockets.com/syndication book. Or you could find me on biggerpockets.com answering questions in the real estate forums and writing articles for their blog. So I get around.
Yeah, absolutely. You're such a top speaker and educator, and that's what I appreciate about you. You're educating and helping people equip them to create and preserve more wealth with real estate investing. And with that being said, anyone who's listening to this, and if you might be actually watching this inside of our custom portal for our deferred sales trust clients or pre-clients for the due diligence, you want to reach out and connect with Brian and or his team. Let us know, and we can connect and walk through the opportunities that are available for the deferred sales trust funds to be invested with Praxis Capital. With that, we appreciate you. You can go to capitalgainstaxsolutions.com to learn more. And if you're a business professional listening to this, you can go to experttaxsecrets.com to learn how to use the deferred sales trust to grow your business and maybe potentially grow your own syndication business as well, to raise funds for folks who have highly appreciated assets. Thank you so much for listening. Please